Thank you all for joining us today. We're launching another student housing investment opportunity, Level 27. We're going to talk about that a bit today. It's a 756 bedroom property housing students at the historic Miami University of Ohio, located in Oxford, Ohio. I'm Jake Bentz. I am here today with my counterpart, Renu Ramu, and we have the rest of our team here as well. Renu and I head up the investor relations team here at Rise Select.
And we have Girija, our Chief Operations Officer, with us, as well as Gopal Saragopal, a founder, here with us today. Ryan Schmidt, our CEO, was unable to join us, unfortunately. And just a small disclaimer, this particular investment is only for accredited investors, and this is not a solicit or an offer to sell securities or any investments. Please consult your tax advisors and accountants for any decisions that you want to invest in.
Gopal, why don't you go ahead and tell us a little bit about how you and Ryan got started with Rise?
Yep. So after I sold my software businesses, I started dabbling in real estate, buying single family, like condos and townhouses. Ryan was buying a bunch of single family houses. We met and we decided to join together in 2014, and we started buying multifamily properties. I think we bought 9 properties just using our own money. We were quite successful, and lots of family and friends wanted to join. So we opened it up for other people to invest. 2018, we started accepting other investors. And 2020, we decided to focus strictly on student housing. So that's where we are today.
You can see by the strong history of returns that Rise has managed, going back to in 2022 is probably a good example. Heartland Village in Normal, Illinois, Rise purchased that. They sold it for $12.8 million with a gross profit of $3.5 million in 4 years. So more than doubling the investor's money. An investor that had money in at 100 had money out at 202. So $100,000 in, $202,813 out. Not a bad investment.
As you can see, there are different scenarios for every property. The holding period differs. It's on a case-to-case basis. But Gopal, can you just give us a brief about the common thread between all these properties here?
That's excellent question, because that's the kind of the crux of what we are about. We buy properties that we believe are capable of much higher returns, but not performing well because of bad management. We do not buy properties that are poor in buildings or in a bad location or in a bad town, bad college. We buy it when everything else is good, but the management is not very efficient. If you look at all 4 properties we bought, that was exactly the case. It wasn't even the staff sometimes. Sometimes it is just the culture of management. So our focus, Girija's team, does a fantastic job of concentrating on improving the operations, improving the marketing, improving the culture of it. So we increase the occupancy, we increase the net operating income. So that's the bottom line for us. And we sell it when we think the property is operating at peak efficiency or close to peak efficiency, and the market is right. For example, Caprock in Pampa, Texas, we only had it for a year and a half. But by that time, we had increased the occupancy tremendously. We were able to sell it in 1.5 years, but investors got double their money.
So this is where we are today. I must say that in 2024 alone, we acquired 4 new properties. So we have a holding of 8 properties in total, and almost close to 4,000 beds right now. And I should also point out that almost 90% or more of our investors have come back and invested with us again.
I think that's a pretty strong testament to what we've been doing.
If you don't mind, in the previous one, there's a line in the bottom that was kind of ignored.
Oh, yes.
Girija can take it.
Thank you. So that's the 15-5. So we always love to dream big and kind of like go after big targets. So the company's mission right now is to acquire 50,000 new beds within the next 5 years. So that's the goal we are all working towards. And you'll be shared with all the materials and the RISE profile after this webinar. And that talks a lot about it. So there we are. From 4,000, we are aiming to go to 50,000. And we all welcome you to the journey along with us for the next 5 years here. So
Thank you for covering that, Girija. Yeah, big moves ahead. Lots of fun stuff to come.
And there are certain things that usually sets us apart from a lot of our other competitors, other players in the market. Yes, of course, Gopal knows this, Girija knows this, Ryan. We definitely get college students. We know what they want. Girija and her team are pros at getting our occupancy up when it comes to leasing and all that. And of course, like Gopal mentioned before, we focus on underperforming properties. We try to take them and improve it. However, the third and the most distinguishing factors is how founders are involved in this. Gopal, why don't you go ahead and say a little bit about how you and Ryan come into the picture as investors?
Yeah, primarily, we are the largest investor overall. We have, I don't remember what percentage, but way more than any other investor. Ryan and I feel very, very strongly we have to have our skin in the game. We started this company to invest our own money. And to this day, we are the largest investor, and we plan to stay that way as long as we can.
That's awesome.
okay, there is one question which I get often. How is your money treated different than investors' money?
Fantastic question. Our money goes in exactly same as any other investor's money. So if you as an investor is getting 30%, I get 30%. If you get 17%, I get 17%. So me and Ryan get no special treatment. Our money is exactly same as anybody else's money.
Good to know.
I think that's
So when we
very,
talk about,
very commendable.
yeah. So when we talk about having, returns, very good returns. So unless all of you make good returns, the founders are not going to make good returns.
It's a great position. I think that's a strong testament as to why so many of our investors come back to reinvest in property after property. Gopal, you and Ryan talk a lot about the RISE recipe and our secret sauce. Give us a little taste of the process, like that, no pun intended. Give us a little taste of that process from acquisition to exit, if you would, please.
Okay, let me be upfront. There is no secret sauce. Everything we do, anybody can do. If there is a secret sauce, it is that we do. I don't again, not a secret sauce. It's an open secret, let's call it. We execute well. The idea of how we operate, there is nothing that is unique. Anybody can do it. Okay, I want to be upfront about it. So we talked about what kind of properties. We want to buy a property that, so we have a team that does a lot of research before we buy a property, why this property is not performing well. Unless we feel strongly it's because of poor management, we don't touch it. That's part of our due diligence. And once we acquire it, Girija, as Chief Operating Officer, has a team that knows how to turn it around. We send a marketing team, we send an operations team that knows exactly what to do. Each time we come up with a new problem, so we learn one more thing, we add one more skill to ourselves and move on to the next project. So it's a simple plan executed well. That's the secret.
So we believe that we want to take care of our employees first rather than anything else. So we have a strong team out in the States. The directors and our founders are based out of US. And we have like a strong team built in India who helps us with all the numbers and analysis to empower data to the offshore team to kind of like act upon it. And all our properties are self-managed. So we don't have a third party managing our properties, which is like a huge plus. So we have our management wing taking care of all the properties, and we have staffs like at each of the location overseen by our director of operations. So we listen to people. We listen to their ideas and we act upon those ideas. That's the most important thing. We don't believe in kind of like imposing rules or like orders on them. We listen to people. And I mean, I keep saying one thing. The person who joins the company yesterday is no different than me working for this company. Our roles and our way of operating is different. What I'm doing is different than them. But when it comes to an employee, we are all on the same page. So that has been the secret, or that is the strength, I'd say, for having everyone motivated and feeling responsible and taking the ownership. So
That's great.
Awesome.
That's great. And we also do try to have a little bit of fun. We were trying to convince Gopal to do the Zoom webinar from the pool today. But are you going to get in that floaty later on and finish the webinar from the pool?
I don't think people want to see that.
No. Okay. All right. Renu, yeah, you want to go ahead and dive in here?
Sure, Jay. So there comes level 27. The whole webinar is about this. So let's go on to the next slide. So level 27, as you all know, is situated in Oxford, Ohio. It is about 1.2 miles from the campus. It's spacious. There's plenty of parking, and there's a shuttle service from the campus to the property. The next slide, here you can see an overall property overview. You can see how spaciously it is all set up, along with the pool, the clubhouse, and it has really good courts. So it makes it a highly amenitized property.
So beyond all those amenities, you have, well, let's talk about the property itself first. It was built in 2006, and it has a mix of 3 and 4 bedroom units, a total unit count of 216 units. More importantly, it has 756 beds. Gopal, do you want to speak to why the bed count is important?
Well, because each bed is a separate lease for us. We do not allow multiple people in the same room, only one person per room. And if it is, let's say it's a 2-bedroom, there are 2-bedroom unit, 2-bedroom apartment with a kitchen and everything, 2 separate leases. So each person that's signing up for a lease is responsible for only their part of it. They don't have to combine together and all that. So it makes it a lot more attractive for students.
Yeah, the renting by the bed is so key and has been a big driver of our success in getting that net operating income up. The property is a large property in acreage. It is 19.7 acres, and it has a ton of parking. But as we stated earlier, the students' primary mode of transportation to and from campus is the shuttle service that's provided for them. So that's pretty handy there as well. Student population at Miami University is pretty impressive. They have over 18,000 students enrolled. That's a mix of over 16,500 undergrad students, and then another 2,200 plus graduate students. So over 16,000 undergrad and over 2,000 graduates. It's a good student population to draw from for the property. Oxford itself is a vibrant college town, and it's a historic one. Miami University was one of the first universities in the U.S., dates back to 1809, and it has consistently had a high rate of college applicants. The applicants drastically exceeding those that are accepted for enrollment, and that is just another piece that helps reduce the risk and makes this a great property to go after. So some of the amenities that were not mentioned earlier, each of the units has a spacious kitchen and in-unit laundry, They're fully furnished apartments, and they all have an ensuite bathroom. So this is something newer with college housing, where each bedroom has its own bathroom. And I know that that didn't exist when I was in college. And Gopal, I imagine was
No.
not something you experienced either. So really, really great living opportunities. There's study rooms as well as the clubhouse. So the property really offers a lot of great amenities for the students. So as I mentioned earlier, it's a combination of 3-bedroom, 3-bath units and 4-bedroom, 4-bath units. So 108 units of each of those. The apartments are large, average unit size of 1,603 square feet. So good size space for the students. Also, I want to note that the construction of the property is very solid. Josh, our director of operations, went out to visit the property, and it came back with really high marks. New roof this last year, new roofs throughout the property, and it has Hardy plank siding. And for those of you not familiar with the James Hardy siding, very, very durable, sustainable siding. Really, really good to have a strong, well-built property.
Here are some glimpses of the property. So Jake, if you can walk us through the market overview.
Yeah, absolutely. So Miami University, as I mentioned, was founded in 1809. It is the 10th oldest public university in the U.S. 120 bachelor's programs, 70 master's and doctoral programs, over 16,500 undergrad students, and over 2,200 grad students. So again, the applications drastically exceed the number of accepted, and those applications are increasing annually. So it's a really good student population to draw from. Miami University, go Redhawks. They are a D1 hockey school and D1 football as well. You may have caught their college bowl game that they played in over the holidays here. It is the #1 public university in Ohio for return on investment for the students. So another great feather in the cap of Miami University. So being a top-ranked university with a growing student population, 1.2% annual enrollment increase, the rent significantly below the surrounding shadow market for level 27. So we have a great opportunity to go in and take a good market share to get these beds filled. So Gopal, tell us a little bit about Gurja rather. How about you tell
Sure.
us a little bit about the opportunity that we have with this property?
Sure thing. So we did a detailed study of this property, and both the directors were on the premises conducting a detailed in-unit inspection. And our results strongly suggest that this property is close to $100 less than what the average market rate in the area is at. And all the studies have pointed us towards like a huge mismanagement play, which we all love about. So we are not going to be like spending a ton on CapEx, doing modernization and whatnot. We believe if we kind of like operate it the right way, this property is going to yield best results, just like any other properties we have had in the portfolio so far. So
If I can jump in, just to add a couple of things. We are buying this property from one of the largest real estate companies in the world. They are moving towards high-end rental properties and commercial properties. So they're kind of like disposing of this property because this is not in the sweet spot of where they want to concentrate. We have purchased property from the same company in the past that later on we will talk about it, has been a phenomenal turnaround. I want to take a minute here to talk about something else. Like you can see the property looks fantastic. The issue is the management culture. And many times we go in there, we don't find it properly advertised. We don't find the property manager, the leasing managers are not very responsive to the students coming in, how they show the property. We concentrate on improving the culture of it. One of the great examples, this is a kudos to the team, a property, again, we'll be talking about it later. When we purchased the property was like what, 65, 70% occupancy. And the manager, when we talked to her, was very clearly frustrated that she was not able to implement anything decent. We talked to her, we gave her the liberty to come up with new ideas, and she was energized. The same manager turned the property and has it at well over 90% occupancy today. So what we like about this particular property is that this is exactly like the other property we bought from the same company, which again, we will give you more details later on how much turnaround happened.
Yeah, I think it's great that that you guys keep the staff that's there and just supply them with the tools that they need to be successful. I think that's worked really well. All right, so let's dive into the nitty-gritty of the investment. So once you're ready to pull the trigger and invest in Level 27, let's take a look at the projections on it. Renu, you want to run with that?
Oh, yes. So we have the current occupancy and the projections here. Since we have Girija here, I think she'd be the best person to give us the plan of action that she has in store for this particular property.
You. So as you see is on the slides, currently they are 59 and we are targeting close to 82% occupancy. So the first line of action item on this property is going to be like having one of our seasoned community managers go in and operate this property from day one so that they will operate it the right way from day one. And we're going to like increase the rents as well as like increase the occupancy in the next couple of years, which will lead to the road of stabilization. And we have identified a couple of major avenues where we can save on the expenses part. So that's going to be our target in the next couple of years to kind of like increase occupancy while matching with the market rate as well as like reducing the zones identified on the expense side. Go ahead.
Yeah, one question that just came in is that you're targeting the occupancy to be close to 82%. Is there enough demand to satisfy that?
Absolutely. So the 82, I'd say, is like a more conservative bet that we have taken. We did a detailed market survey of the area, and all of the properties are on an average 84% plus occupancy. So the demand is obviously there. And we have a handful of property over like 90, upper 90s. So it's not that it's undoable. So it's a very realistic, conservative target that we are aiming for.
Thanks, Girija.
Yep.
So these are our investment tiers. We have introduced a minimum of 10,000 investment for those of them who want to even start. It goes up till class A with a minimum investment of 1 million. Jake, if you want to explain a little bit more about the preferred returns and profit split.
Yeah, absolutely. So depending on your investment class, you will have preferred returns according to the amount that you invest. So our preferred returns will start upon stabilization. You will accrue those returns beginning when we acquire the property. Those distributions on those returns will start when the property is stabilized. And we do make sure that we get caught up on all the unpaid returns and return your initial investment back to you before we sell the profit. And that's where the big gain comes in on the sale of the profit. And you'll see the split on the table here. The percentage of your split is again aligned with the amount that you invest on the property. Gopal, why don't you go ahead and walk us through those distributions and the profit share?
Sure. Like what Jake just said. So we have to pay the preferred returns to the investors first. So whatever operational profits we get, we start paying the preferred returns. By the way, we have made a policy decision. We will not pay any preferred returns until we have a positive cash flow. Just because we might have some extra money, reserve money sitting in the account, we are not going to start handing it out. We will only hand out distributions when we have a positive cash flow. Quite likely, it may not happen early in the first year, likely later in the first year, but more likely in the second year. So, like Jake said, if we don't pay it the first year, whatever we did not pay gets accrued. It will be paid either second year, third year, it will be paid. Once all the preferred returns are paid, let's say we sell the property, then we give back everybody's investment. So you get your capital and you get the preferred returns. What is left, we will call it waterfall profits. That waterfall profits will be shared between the investors, you, and the Rice Select, the company. So Rice Select, for doing all of this, does not get any profit until you get all of your money back, plus the preferred returns that was assigned to you. So it's a very simple formula. Rice Select does not make money unless you make minimum the preferred returns that you were promised. So it's in the best interest of Rice to only find properties, only buy properties where the potential for profit is well over, somewhere in the 20% plus range. Otherwise, Rice Select does not make much money. Okay.
All right, thank you. Thank you for explaining that. And by waiting on those distributions until the property is stabilized, Gopal, does that not help to improve the NOI later on so that the property will sell for more?
No, I don't think it really makes that big a difference. The key is the key for increasing NOI is increasing the occupancy, increasing the rent, and managing the expenses. So that's the Girija and the operations team excel at. So, and one of the strategies we have used very successfully is that first increase the occupancy, even if it does not necessarily increase the revenue much. The property that has higher occupancy is more attractive to other people. When people come to look at a property, when they see the property is almost full, it becomes much more attractive. So increase the occupancy the first year, focus on that, and then increase the rent in the following years.
Okay, thank you for clarifying that. All right, so back to the projections, you can see the equity multipliers are pretty substantial. So we project that with a Class A investment of $1 million, your projected ROI will be 23.2%, and your projected equity multiple comes out to be 2.16x. So very, very attractive opportunity given the projections for what you're going to receive over the entirety of the investment. Now, we have been and hope to continue exceeding our projections. So pretty impressive so far. Let's keep going that route. And a lot of that's due to our,
You made an excellent point. The 4 properties that we completed the cycle and we sold, the results were better than what we had initially projected. And the two properties we are likely to sell this year, I have absolutely no doubt that will exceed the projections that we gave.
Renu, you want to?
Let me get back to this. This is kind of follow up on what I was saying earlier.
Yes.
The first year, we may not give your preferred returns, or we may give only a portion of it. because like I said, that's why we are trying to still improve the cash flow on the property. Second year, historically, we have paid the preferred returns. Historically, the third year, we catch up whatever we did not give the first year, we catch it up in the third year. Every property, by the time we are ready to sell, all the preferred returns will be current. We would have paid all the preferred returns. A couple of minor notes. The preferred returns, what we don't pay is accrued. It's cumulative, but it's not compounding. So we don't pay interest on it, but it will continue to be accrued. The other thing is that you can choose whether you want the returns to be whenever we make it monthly, quarterly, or yearly. There are people that say, hey, don't give me a few $100s every month. I would rather take one lump sum so I can do something nice with it. It's your choice. Okay.
Thank you for explaining that. Let's take a deeper dive into some of the other projects that we've done and have going on to give folks a better feel of what we do. Gopal, you want to talk a little bit about Heartland Village, or was there another one that you wanted to focus on?
I think,
Go ahead.
yes.
Right.
So I know Girija has commented this before. She says, every time I look at level 27, I'm reminded of the reserve. So I think we have the reserve here. Why don't we go there and let her do some explaining?
Let's go to the reserve. That's a much better. I mean, this is good one, but let's go to the reserve. Yeah.
So the reserve and level 27. So internally, we are talking about level 27 as the reserve 2.0, because the structure, the layout, everything reminds us of this property at Carbondale, which during occupancy, during purchase was at around 47% occupancy. And today we are at 94% occupancy. And we are currently pre-leased around 55%. And I keep getting this question every now and then. Okay, how did you guys do that? What was that you did that the previous sellers didn't think about? I'd say that it is the smallest things. So for example, this property, when we took over, when we went to apartments.com, we found that the listing was listed as sold out. So no leads, no new people who are going to show interest. So it's the smallest things we pay attention to. Every dollar matters to us. So we just kind of put the right people in action, and we kind of look out for venues on where all we can save on money. So yeah, the numbers right there at the bottom is a testament to what Rise's operations are and what our capability is. And that being said, it's the same 768 beds at level 27, also including the model units. And we are all set to kind of do the strategy all from scratch. Again, one more time.
Can I add one more thing? Our current manager at the reserve, by the way, we are planning to sell it this year because it is operating at near peak performance. I mean, there is still room for it to improve, but whoever is buying it would like the fact they can even improve on it. What I wanted to say is that the person that is managing the reserve today is eager that we buy level 27 because she would like to come over to level 27.
I mean, she sends me mail every week asking, okay, when am I going to make the move? So it said that it's going to be the 11th, so just hold on. So yeah, the community manager as well as assistant community manager from the reserve is going to be moving over to level 27 and operate the property from day one, which is a huge plus for us. So
that's great. And we are going to be sending this out to all of you that are attending so that you can take your time and read through these slides on the rest of the case studies at your leisure.
If you don't mind, go to the UV for a second. Okay, I want to make a point about the UV. The manager this is the case I mentioned earlier. Tony was the manager the day we bought it. She was definitely frustrated because she could not do the kind of thing she wanted to do. And she is still the manager, and it is at a 90+% occupancy. And we are putting this one also on the market this year. And she is she's also saying the same thing. Okay, when we sell it, give me the next property. put me on your the next property. I want to do the same thing. So, and it is all about culture. We gave her the flexibility. She was intelligent, capable, imaginative, but the company, the previous owners gave her instructions. This is what you should do, nothing else. When you have a smart person working for you, the best thing is to listen to them. Let them tell you what's the right thing. Sure, they will make a mistake now and then. That's life. Then as long as he's a kind of person that makes a mistake and learns from it, we are all better off for it. So our secret sauce, if at all anything, going back to it, hire the smart people and listen to them. They will come up with the great ideas.
Well
It looks like
stated.
we're going to have more webinars and more properties to acquire.
Yes.
So,
That's the pipeline.
Renu, do you wanna walk folks through the process to get their investment onboarded when they do decide to move forward?
Sure, Jake. So you are looking at the material right now. This will be emailed to you. If you have friends and family who are interested, please let us know. We would email this particular material to them as well as a small brief about RISE. Before we proceed, let me state that this is only for accredited investors. So we will have to verify your accreditation status using a third-party software. And once we have that, we would send you a questionnaire to just get your basic details, fill out the paperwork, send it over for execution. And once that's done, you will have to wire your funds, and then we start our side of the things.
And
Okay,
if you have any questions about your qualifications for accreditation, don't hesitate to reach out to us.
Yeah.
We're more than happy to help you understand the qualification requirements for accreditation.
Yep. One of the questions that comes up is the interest rate. What does high interest rate today, how does that affect? There are a couple of other questions also that came along with it, but let me answer that question first. The high interest rate is not in any way a detriment to us. If anything, it's actually a positive. That might seem strange, but let me explain. Because the interest rate is high, when a bank tries to finance a property like this, they look at the last year's performance and see, can it pay the mortgage? That's how the bank decides whether to give a mortgage or not. So somebody who is trying to buy this, when they go to the bank is going to look at the poor NOI and say, we are not willing to finance it, in a very favorable terms. The high interest rate makes it even harder for the buyer. RISE comes in. This is 20, if I remember correct, this is 24th property we are buying. Our majority of the properties we are buying was poorly performing properties in the past. So the banks are used to us buying poorly performing properties and turning it around. So I don't mean to boast, but we do have a leg up on the competition. We can get financing from banks that most buyers cannot. The high interest rate scares them. High interest rate means the banks are extremely cautious, but banks know us. For example, one of the banks, local banks, they did 6 or 7 properties, they financed it, okay? So they know us, so they are not concerned about it. That's a big plus we have. And high interest rate reduces the number of potential buyers. That means the price is driven down. So we are getting it at a superb price because of the high interest rate. So in this case, the high interest rate actually is helping us.
Thanks.
That's great.
Okay.
Thanks for that explanation, Gopal. I have another question that came across here. What is the break even on the property in terms of percentage of the property that is occupied? Gopal, do you want to speak to?
No, I think Girija has to answer that. Sorry, I don't have that information.
Girija, fire away.
No problem, Jake. So it's around like 74% occupancy. That's going to be like meeting our break even with the current metrics.
All right. Sounds good. Thank you. Another question that was asked is with the ongoing immigration rulings with the new leadership, how is that going to affect the student population of the university? And how does that affect us and our decision? I actually did a little research on this, and the international student population at Miami University is 7%. And so less than 10% of the student population is in international students. Given the number of applicants that Miami University gets, I don't foresee much change coming to the table as far as enrollment goes. So Gurja, Gopal, did you have any
Yeah,
insight?
I want to jump in. Okay, the 7% international students, they're all legal students, so there's no issue any of this concern about going after the illegal immigration, all that. It's a non-issue for these students. They all came through a proper paperwork and everything, so that's a non-issue. If anything, couple of things this administration has said is likely to favor us tremendously. One of the things, like for example, the president said at one time is that we should give green cards to people who graduate from US universities so they stay here instead of going back. Guess what? Like in India, people are excited about it. They are willing to, they want to send their kids to US because once they get the degree, they can stay here. So I don't know if it's going to happen or not. I'm not predicting it. So if anything, international student population, in my opinion, will increase in most of the universities, especially well-established universities, for two reasons. One, the schools are very keen on getting international students because they pay a higher tuition fees than local students. So it's a big positive to them. Second, the general tone of this administration is welcoming international students coming here legally. So if anything, it's going to help us.
Thank you for that. Gopal, do we dare ask who was president when you came over to go to college here? Is that
Are you trying to embarrass me? No. When I came over, it was the president who just passed away, Jimmy Carter.
Jimmy Carter, the potato farmer. All right. All right. Are there any other questions that we haven't gotten to? I think we're
Again, if anybody has a question, they can, Jake and Renu, you have your emails on the presentation, correct? So they can shoot a question also.
Yes, and we'll be sending it all. We'll send it out to all of you as well. So you'll have all kinds of avenues to get back to us with any questions, because questions will come up. You'll want to know more details about how things work, and we're more than happy to walk you through the process. So thank you all for joining us today. Gopal, thank you for taking the time to join us, and Gurja and Renu, thank you.
Thanks, Jake.
Bye.
All right. Until next time, take care.
Thanks, everyone.